There it is. Okay. Those instances of it going should fix it. Let's see. Because it was going back through desktop audio. Yeah, I should have nothing coming out of desktop audio. All right, that should be good. Yes! Ha! I am both an asshole and a genius simultaneously. All right, well, now I don't really have any time, so I guess we'll do something next time. All right, see you guys later. I'm just kidding. Be really funny, though. Wasted all my time on that. All right, well, I'm out of time, so it's been real, guys. Take care. Anybody who's in the premium group, we'll start our new live stream with no echo. Hope you guys enjoyed the show. All right. Shut up, lady. I got 22 people. I was hoping to get more. It's fine. I could always play this back. Most informative content. Yeah, right? You learn something new every day. You can be both simultaneously a genius and an asshole. I had the live stream playing, but I have my TV muted so it doesn't create an echo by coming through my TV and then back into my computer's mic. But it still works in the background, so even if I have no audio coming in here, whatever I'm playing on the computer comes back in directly to the stream, even without having any sort of audio coming out of the speakers. But anyway, all right, let's do this. I'm going to show you really quick what my EMA strategy is, just to give you a taste of what we work on and the sort of stuff we're working on. It's a really, really good strategy. It does a great job of showing you pretty much what, when you're going to have an extended bull run or a potentially really big bull run. The beauty of it is, just to show off a bit, I can say, give me a coin, name any coin. It doesn't matter what coin you give me. You can name any single coin. It does not matter, and I will show you in every single case that it works without fail. Philicon uses an EMA strategy for his trading. The problem with his, as much as he's taught me and I respect his strategies, it's very badly trailing. So by the time his strategy says, all right, now's the time to buy, it's way after the bull run started, and when it says to sell, it's way later. Now, his position is it's very low risk, so getting in or out at those points, you're getting rid of an extraordinary amount of risk. So with it, you're losing a bunch of profit and profit potential. But on the small amount that you are getting in for, you're getting a close to guaranteed profit. It's a totally viable strategy. Mine also limits risk. I'm talking about combining multiple indicators and multiple strategies. So using the EMA strategy on its own isn't like, all right, buy here and sell here, and every time you're going to make money. There is some risk involved because in certain instances you'll get a crossover of the EMAs, then it'll come right back down if we're getting some sort of crash. But more often than not, if you get into it, out of 10 times, only one of the times it has to work. Realistically, it works about 9 out of 10 times, 8 out of 10 times. But if it works 1 out of 10 times, you're still going to profit like a motherfucker because you're going to get substantially more higher gains than you would using a badly lagging indicator. In this case, it doesn't take very long for it to get to the point where it's profitable. So I'm going to take one of the coins just to pick one randomly. ICX, EOS, whatever. All right, doesn't really matter, like I said. All right, let's take a look at the first one that I just looked at on the screen, ICX. Here we go. ICX BTC. Let's look at this one. So I have, this is on the hourly, works best on the hourly, really works on the hourly for what we're doing it for. And it's the 55.99 hour. So I have the 55 and the 99 EMAs right here. And this is essentially all it is. Right here, we got the 55 on top of the 99, right? I can go to literally, you can name any coin and it doesn't matter. During this really strong bull trend, we had the crossover right here. Here's the 55 on top of the 99. We get up to the top, and now we're going to cross back over. We get the 55 below the 99, and we're going on a very strong bear trend right back down. We bounce off of the support. We cross over again. In this particular instance, the crossover happened all the way at the bottom. Right here, we didn't get the crossover until a little ways down from the top. That happens for several reasons, which I'll get into with the premium group. Or if any of you guys want to join the premium group or something, we go over a lot more content than just this. But there's a lot of aspects to my overall strategy. I factor in using Ichimoku clouds. Support and resistance are key. You have to use other indicators like RSI to predict when you're getting a higher probability of reversal. So in this instance, there was a little bit of a delay where you would have missed out on that profit. If you were trading based purely on this EMA strategy, you still would have got in here and sold here, so it's still a substantial profit. The issue that I was explaining with Filicon strategy is you really don't get in until about here, and then you don't get told to sell until about here. So it's very low risk. It works every time, so you're still making profit. You're just leaving so much profit on the table. I like my strategy more, especially for day trading and swing trading. So in the case of swing trading, or in the case of longer term swing trading over the course of a week or two, it's an amazing strategy. It's tremendous. It's the best strategy. It's fantastic. It's really wonderful. It's the most wonderful strategy in the world. It's called the Trump indicator, the best indicator. It's just fantastic. It's wonderful. So in any case, we get the cross here, 55 on the bottom, bear trend, cross back over, 55 on the top. And I'll give you one guess. What happens after we get this crossover? Goes down. No, I'm just kidding. It goes up like a motherfucker. 55 on top of the 99. Let's just see. Right here, the crossover occurred at pretty much 3,000 sats. 55, 55, 55, 55, 55, 55, 55, 55, 55. Then we get crossed back over at 4750. So let's say 3,000 to 4750 would be 1750 divided by 3,000, roughly a 60% gain. I'm sorry, it's not 70%. I know you guys are greedy little fuckers, but yeah, that's not bad. 60% gain if you were to trade based on that strategy. Now, when you factor in other strategies, you're looking for bullish and bearish divergence. We were coming down here, and we had some really strong bullish divergence on the RSI. Take a look at this. Compare that with the downtrend on the price action during the same segment. Yeah, that's what we call, it's a special term, that's called bullish fucking divergence. It's different than regular bullish divergence where you get a probability of small gains. This is bullish divergence, balls to the face. It's a very technical indicator when you can make a shit ton of money based on knowing your shit. So in this case, we combine a bunch of different indicators together, find the optimal spot for a support. I had a support here based on past trading history. It was really a support range. We dipped down a little lower, so it was pretty much from here to here. But we got support in the general vicinity. We were able to consolidate around here. You notice the bullish divergence on the RSI, and then boom, we move up. Get the crossover, 55 on top of the 99-hour EMA. Ride that all the way up for a 60% gain. Notice I calculated that based on here. If you were trading based on the crossover back into the bearish trend, where you have the 55 below the 99, and you were to wait till there, it would have been a 60% gain over the course of, what is this, the 9th to the 20th, so 20 days, over a couple weeks pretty much. If you had gotten out earlier, closer to the top, you would have made even more, but I'm calculating it based purely on the EMA crossover. Do you guys get the point, or do you want to name another completely random coin so I can show you how flawless this is? We're getting back in a downtrend. There's the 55 below the 99. We cross over again here, get a short little uptrend. This is what I was talking about. Sometimes you'll buy in based on the crossover, and then you sell based on the crossover. You barely make any profit. Sometimes it happens. Right here, you get a crossover, and you think you're going bullish, but you actually don't really do anything. You go down a bit. So by itself, it's not a flawless indicator. You need to combine it with other stuff, which is why I call it Ichima, because it's, instead of just Ichimoku or EMA, it's Ichimoku and EMA. I factor in both. The way Ichimoku clouds work, a lot of it is based on the concept of using exponential moving averages and certain calculations of the differences between them, standard deviations, and the linear regression of that moving average. So if it's going down, it's not necessarily focusing on the actual EMA, the difference between the two compared to a future where you can expect it to go. That's how they come up with these clouds where they say, all right, this is a green cloud, buy signal. But you end up getting leading span A and leading span B on the Ichimoku cloud. Those are the top and the bottom lines that form the actual cloud. Those provide very good supports, a moving support, not like a support where you have a Fibonacci retracement and you think you're going to get a bounce there. This is actually moving up. But if you look, we're following the path of the Ichimoku cloud pretty well. Then as the Ichi comes down, we're again following the path of the Ichimoku cloud down. So it doesn't necessarily point to a particular line on a chart that's a support or a resistance, but it gives you a moving support and resistance. Same thing here. Notice how it sort of is in lockstep with the EMAs themselves, but notice how over here, the Ichimoku cloud turns green, which would have been your buy signal if you were trading with an Ichimoku strategy. With the EMAs, we cross over before that. So you're able to get in earlier right here instead of getting in here when you're already a little bit higher. So you're able to get more profit by getting in with better timing. Timing is sort of what this thing is all about. So if you look at this at any point in time on this chart, here we get another bear trend again, coming down with the 55 on the bottom, 55 on the top for a mini run up. But if you're trading based purely on that, you would have pretty much broken even with very minimal profits there. So again, don't trade based purely on this EMA strategy, but if you look right here, I wouldn't be buying right now. You have them moving away. We had a nice little bounce short term, so if you're trading very short term, that's fine. I advised the group last night that I liked ICX and I had bought into it, but that was with the USDT pairing, so if it fails and crashes, I'm instantly out. That's for a short term trade. For a longer term trade, if you wanted to buy Icon and get an extended run, right now it looks like it could be the bounce and the start of a run, since I think BTC is going to move up quite a bit. I've been calling for a bounce between 58 and 6,000, 5,800 and 6,000, then a substantial bounce from that bottom before we max out after another week or two. Then we come back down and return to our correction down to 3,000 to 4,000. Some of my friends who are analysts, who also do really good videos and everything, have postulated that we're going to correct to down to the 3,000 range, but they think that we're going to go down one more time and bounce off of 5,600. I am not so sure about that. Based on the traffic we've been seeing and the volume we've been seeing, it looks as if we're getting into a pretty hard bounce. I don't know if we're going to go back down before we keep moving up. So it's a really good time to enter into trades. Entering into trades with the USDT pairing are amazing, because if you get stopped out, you're not stuck with BTC, which is still going down itself. You're back into Tether. It's incredible. You can get in. You're not missing out. Let the thing go up 3%. Move your stop loss up to your buy-in price. You're now trading 100% risk-free. 100% risk-free. Initially, there's small risk. And then once you get just a little bit of bullish movement up, you can move your stop loss up to your entry price, and now you're risk-free 100%. It doesn't matter what happens to any coin in the market. You're not going to lose money, and you're guaranteed at least some profit. It's an amazingly successful strategy. It's done me very well, and it's done well for a lot of the members of the group who have been using these strategies, a lot of them, in conjunction with one another. So in this case, just to keep it on topic, for a longer-term trade, I wouldn't get into ICX here. We are, because it's a great short-term trade. If we break through the EMAs, which also serve as a resistance, that shows me that there's a lot of momentum. So most likely we are going to break through them here. I think we're going to break through them and break through the cloud and go on a bull run. But if you're trading based purely on the indicators we're seeing here for a longer term position, that is for a month or two, where you're looking at this much chart as opposed to just this much chart, then it's a little bit early to get in, I would say. God damn it, Jen. I told you to leave the screen door closed. I'm tired of fucking flies flying around the house. I'm plenty calm. I'm just saying. There's 3 flies just flew in. I'm going to be hunting them like a maniac for the next 12 hours instead of working, because I'm a fucking fly murderer. Huh? What, babe? Where the hell is Alright. Where's that? What you're saying? Mana, what time is best to use? Jesse, did you say this could have been the overall bottom? No, not the overall bottom. Winnie, you know better than that. We're correcting down to 3,000 to 4,000. But the bounce before, AMD said, he thought that we were going to go down and a little bit further. His bottom was 5,600 for the short-term bounce, where we would bounce at that price and then move up from there on a couple $1,000 move up on Bitcoin, and the rest of the market would obviously follow. I think the same thing, but I think that this bounce we just had, based on the size of that candle, the volume that came with it, as long as we can keep moving up with substantial volume on BTC, this could be the bounce that takes us up a couple $1,000 before we go back into the correction. Just like we did when we hit 5,900 a few months ago, we went on a really strong bull run back up to 10,000. We're not going to go up that much, but we're going to go up a bit. And before we come back down into the correction, there's no reason why we can't make a ton of money in the meantime on this bounce. And if I'm wrong and we end up bouncing, going back down and then bouncing off of 5,600 and going into a couple $1,000 move, that's great too. I'll get stopped out. I'm in mostly USDT trades. So even if it crashes to 5,600 right now, I'm getting out with guaranteed profit because of our trading strategy. I'm at a point now where I have all zero loss trades. I can't possibly take a loss. It's zero risk. And I have profits already locked in, 100% guaranteed. And then long term, yeah, we're still looking at our deep correction. Once we do our deep correction to 3,000 to 4,000, some guys have it lower. I know, I don't. But once we get into that deep territory, then we'll be poised for a really strong bull run, a much more extended bull run. So we'll see what happens as we get closer. Obviously, I'll give you guys a lot more info as we're closer. Anybody right now who's giving you an exact price either is lying or doesn't know what they're talking about, or they're just guessing. There's no way to know that far out. If we're talking about weeks or months in advance, you can say this is what the charts are telling me, but you can't say this is definitely what's going to happen. So that's why I don't give specific numbers and say this is what we're going to correct you. I think it's highly probable that we get down to that $3,000 to $4,000 range. Once we get closer to that point, both in time and in price, then I'll come up with some more detailed numbers and give you a better idea of what I think the ultimate bottom is. This far out, you simply can't predict that. So I'm going to give it some time, and as you make some more progress, I'll figure it out. Let me show you one more chart just to give you an example. Whoever types the next coin is what I'm going to do. XVG it is. All right, hold on. Go outside, girl. Go. Go get mama. Go get the mama. All right. XVG. Let's do XVG. Oh, yeah, by the way, last night in the private group, we went over some potential plays. Just so you guys know, it was BNB, ONT, ETC, Theta, nulls, and what was the other one? Quantum. It's Quantum, ONT, ETC, ICX, BNB, nulls. That's what it was. Those are the trades that have USDT pairings that a bunch of us got into, and we're making a beautiful profit today. Theta and BAT, Basic Attention Token, were the only two that I made a call on that I got into that did not have USDT pairings, which are a lot more risky if we don't have a tether pairing, because then if we do get stopped out, we get stopped into BTC, which of course could crash. So in the case of Theta, I sold and took my profit already. Typically, I don't even take profit. I just move my stop losses up little by little and lock in more and more profit. That's the way to do it. It's much, much better than just taking profit. I never take profit anymore for the most part. But in the case of Theta, since it didn't have a tether pairing on Binance, I just sold off and took the profit because I just didn't want to risk it at that point in time. But I got in with a bunch of profit, obviously, so I'm happy with that, but it's gone up another like 12% since then, so I missed out on a little bit, but it is what it is. So for XVG, just to close this out, and then I can move on to the live stream with the premium group. XVG, I already have it in here. It's so many, it's easier to search for it this way. All right. Like that call? I don't know if you guys saw that, but I posted that on Twitter, and I gave you a little nuclear explosion to indicate we were going to start going down from that point on. And guess what happened? It was all luck. I don't really know what I'm talking about. All right, so let me So much shit on here. That's what happens when you do like weeks and weeks and months worth of TA on particular coins. You end up with messy ass charts as you go back in time. But if you look at the EMAs here, this long bear trend, same thing, 55 on the bottom, 99 on the top for the entirety of that run. But let's go back to what we really care about, the bull run, right? That's where we make the money. So right here, get the crossover, and we have moved up from that point pretty much the entire way. We then got a little bit of spikes back down again, so this is another instance where if you traded based purely on the EMA strategy, you wouldn't have done very well in this case. I mean, you obviously would have made, like, well, what is it? It went from 400 to just under 1,200. You would have made 300%, so I guess I can't say you wouldn't have done well. You would have gotten a 3x out of it just by riding it based on that EMA trade. After that, it bounced around up and down, above and below because of these spikes. It throws off the EMAs because EMAs are just giving you, it's an average based on past price action. So if you're getting prices that are going up and down constantly, the EMAs aren't going to instantly reflect that. It takes time before those trades or that price action are factored in to the EMA. And that's why you're not getting an instant response. So in cases if you're only using EMAs, it's tough to compensate for these sort of big moves, big spikes up or down. But generally speaking, long extended bull trend, got it the entire time. And then once we cross over, same thing. Negative, we had the 55 on the bottom, dropping down the entire time. Once we get the reversal, we get the crossover very, very shortly thereafter. Instead of some of those other EMA strategies where after the bounce, you wouldn't have had a cross back over until it was like back over to here. Since it happened really early, you're able to catch this little mini run, even though it's not a huge profit. A little mini run like that is still pretty nice. Originally, I thought this was going to keep going up. Then we had a sell-off on BTC right here. So I canceled and invalidated that wave count. And that's where I said, we're just going to keep going down from here. And sure enough, we have. Go back in time a little bit more just to show you the last bear trend. Same thing. The entirety of the bear trend, we had the 55 on the bottom, 99 hour on the top. That was entirely predictable. The entire time that was running down, I would have told you do not buy in until you get the crossover at the very least. And then same thing. Last bull run, huge run up from here. This was down at 87. Oh, sorry. The crossover occurred at 70 Satoshi. The crossover, even if you waited for the crossover and you missed out on all of that profit, if you were to go from crossover to crossover in this particular instance, that's 70 Satoshi to 1284, right? So let's see, 1284 minus 70 is 1214. 1214 divided by 70, that would have been a 1,700% profit. Is that good? I'm not really sure. I'm new to this crypto thing. 17x, that's pretty good, right? 17 times your initial investment. So if you were following that strategy initially, based on this point right here, if you were to get in there and ride it all the way up, you would have made 17x. That means you put in $100 and you would have had $1,700. That's fucking bonkers. It's an excellent strategy in and of itself, but you just have to be careful and don't expect it to guarantee you profits. You have to factor in a lot of these other strategies and a lot of these other indicators. But it's a really good tool to give you a general idea of what to expect. If you see them moving away, when I talk about divergence, I'm not talking about bullish or bearish divergence on the RSI. When I say the EMAs are diverging, that means right here. If you look at the most bullish sequences, like starting right here, they're diverging, moving away from each other, right? So you got the 55 going up, and it's going up at such a clip that it's moving away from the 99. That was when we had the strongest, most impulsive move up. And then they started converging and getting closer together again. And then once they got to about this point, they started moving away from each other. The 55 started moving completely vertical. The 99 was moving at a much slower clip. So when you had that divergence, that's when it's the most strong. That's when the effect and the price action sees the most strong and impulsive move up. So in this case, during the little correction, if you drew an Elliott wave count here, like a 1, 2, 3, 4, 5, you'll notice that during the corrections, the EMAs are converging. So we max out here. EMAs are getting closer together, or they're running parallel. We go on another bullish run up. They start moving away from each other. They're diverging. And then we correct and come back down. And when that happens, we see the EMAs getting closer together. They start converging. And then they start to diverge, go away from each other again once we get into this really strong impulsive move up. So in a situation like this, if I saw these moving away from each other, saw diverging EMAs, I'd have very high confidence that not only were we going to get a strong run up, but it would be a very impulsive move up. And then obviously we're still diverging and moving away from each other here, but it already started coming back down. So that's why I say it doesn't guarantee you. It doesn't say like if the EMAs are moving away from each other and they're moving up and they're diverging, then just hold or keep buying. It means it's going to keep going. That's not the case. You have to look at the other variables, Ichimoku, support and resistance, RSI, and Fibonacci for potential support and resistance. It's critical to include all that shit. But generally speaking, it's an amazing strategy in and of itself. I wanted to share it with you guys. Yeah, you can let me know what you think. I got very little time because I was supposed to start a live stream with the group at 2 o'clock. So I'm going to go so I can do that. But just for the next 2 minutes, it's 2:38 now. So I'll give you 2 minutes. Anybody have any questions? Yes, no, maybe. Anybody have any serious questions? If you're serious and you don't know what RSI is, it stands for relative strength index, and that's this indicator right here. It gives you an idea of potential reversal points if you get to the point where you're overbought or oversold. When you're up here above this dotted line, you are overbought, which means you're way higher than you really should be because markets in general should be at an equilibrium. If you're very, very high above that equilibrium, you have to come down. You know it's time to correct. So once you get up to this price, once you get the RSI up to this level into overbought zones, you know you have to correct and come back down. So look at that. Look right here. We got really high, and guess what happened? We corrected and came back down. We got really high again. Guess what happened? We corrected and came back down. The opposite is true. When you bottom out and you're oversold and you get below, you're oversold and you get below those areas. What the fuck just happened? I just white out the entire chart somehow. Seriously, what the fuck just happened? Let's see. All right. So, what was that question? Hold on. Well, looking at the smaller time frames give you an early indication of the EMA cross, not with 99 and 55. It took me a long time to get to those numbers. I tried it with 25 and 45, 35 and 85. I tried a ton of combinations. 55 and 99 after pretty much doing this every day, full time, nonstop for weeks on end. Did I refine it to the point where I felt that 55 and 99 was the ideal level, and that's only on the hourly. Once you get to different time frames, you have to use different inputs, and I just haven't perfected that to the point where I'd share it with anybody yet, but it's something I'm working on. Trying to figure out how to mimic that same behavior, but on shorter term charts. It's possible, it's doable. It just needs to be refined a bit more. So right now the 99 is on top, RSI is rising. So is it a good or not for this example? Which coin were you talking about, Jim? All right, so currently for XVG, if we were to go back to that and just look at it like right now. I have so many in here, it's just easier to. Oh, never mind. I see it on the bottom. Yeah, so right now would not necessarily be a good time to buy. Right now, you are breaking through the resistance that is the EMAs. The 55's on the bottom, so this is bearish. The entire time that we've been moving down, the 55 has been below the 99. This is bearish, especially as it's diverging and moving further away. So right here, we started converging after this big move up, right? So if we kept moving up, we would have crossed right there because we were converging and getting closer together. Same thing here. We were going straight. Then we started picking up a little bit, so we started converging. We almost crossed over. If we had crossed over right here and you bought in, you would have lost money. So you don't want to just, as soon as it crosses over, you just buy. That's why I keep saying you really need to learn other indicators. This is only one tool in your toolbox. You have to learn how to use other tools. Of all the tools available, I would say Marius is an excellent tool. So you can feel free to use him. Probably the biggest tool out there. But I can tell you that XVG is going to be 914 sats at about 11:74 p.m. on June 39th. So make sure you keep an eye out for that. I learned that from Marius, but I'm for the little guy, so it's important to really to trade for Oompa Loompas and midgets. It's a good thing he takes care of that community. So yeah, I wouldn't get into XVG right now just based off of this. I mean, there's other things that go into it. I would want to look at support and resistance levels. I think it looks like it bounced. It might be getting ready for a nice run. If we break above the 99 EMA, we've now come down. We're finding support at the 55. If we break above the 99 and we're moving up, we could get to the point where I'd feel bullish about it. I was talking to a friend of mine who analyzes XVG a lot, and he's very bullish. He thinks that it's poised for a really big move up. XVG is a shitcoin. I'm not a big fan of it fundamentally, but if we can make money on it, I'm game. I'm more than happy to trade it a bit with you guys. So maybe I'll post some charts for it if I see a potential opportunity. So keep an eye out for that. And that's that for XVG. I don't want to get too much further into it because we got to get onto the. I got to get into the premium group live stream now, and we're just taking time from them. So, no, that doesn't make any sense. I wouldn't use moving average versus exponential moving average. It's difference in way it's calculated, but that wouldn't really indicate anything. I don't think. I mean, it could. I could look at it. I don't see how that would actually. I don't see how that would give you a signal. Try to in any way model or predict what a coin's going to do. Yeah, if anybody wants to join the group, my whole thing was, well, first of all, we do more than anybody else. So we do every day. There's some days where I'm really busy and I can't do it, but almost every day we do like 2 or 3 hours long phone calls where I talk to the members. They talk about different investments, how their portfolio looks, what sort of risk management they're looking to do, and how to calculate that. We go over various strategies, how to do Fibonacci or Elliott wave or support and resistance or EMA or Ichimoku or Ichima, and how to use different strategies. So we do that typically for several hours a day. Live streams, I do that multiple times a week. We look at specific charts, specific opportunities, and buy opportunities to get in and make some money. I post those charts in the group as well, even when I'm having days where I'm not really available for calls. Every once in a while, there's a day where I'm not in the group that much. We don't do a call. I don't post any charts. It's pretty rare for the most part. I'm very attentive and spend a lot of time every member of the group will attest to that. If you join the public group on Discord, the link's on the website and in my profile on Twitter, so you can see that. If you guys do want to join, in addition to offering about 100 times more than what any other group does, all those other groups that are hundreds of dollars, for the basic subscription, the prices have gone up, but right now it's $50 for a basic subscription where you get everything. You don't get live streams or the voice channel, but you get access to most of the channels in Discord, where I post my own trades. I have my own personal watch list, which essentially is everything that's in my portfolio, and stuff like that, which the premium group has. We have our own chat on the premium group. They get any sort of picks early. In the case of a day trade or a swing trade, sometimes that yields could potentially yield a lot more money in a return. So if I were to give the premium group a trade that's going to go up 20% and they're able to get it for the first 10%, the basic group might only make the second 10%. So there's a lot of benefits to the premium group, which is $130 a month. Anything educational, Vader University, doing these sorts of chats and these sorts of live streams where I show people how to actually trade effectively, efficiently, and profitably, that stuff is only for the premium group. But just for basic access to be able to communicate with the other members, share information, the basic group at $50 a month is substantially cheaper than any other group out there. And we have an amazing community. Like, I created something called Mos Eisley, which goes with my Star Wars theme. It's called the Spy Lounge. Essentially, we have hundreds of members. So every member goes out and joins 2 or 3 groups on Discord, on a Telegram, Discord, Reddit, guys that are following on Twitter. So say there's a particular coin you really like, ABC coin, you can go and follow all their stuff, and then in the Spy Lounge, we share information. So I'll find something out about flues and say, guys, I just found out they released their app in North America. We're going to see a move on it pretty soon. They're not on any exchanges yet, so they haven't exploded. They will once they get listed on Binance and Bittrex and any other exchanges. But there's a lot of projects out there where guys have found that sort of information on Reddit and in the Telegram and stuff before it makes its way to Twitter, before people find out about it and everybody starts buying it up. We're able to get in early. So there have been a few plays where our group members have brought that information into the Spy Lounge. They go out, they gather intelligence, they bring it back, and then we're able to get in plays based on fundamental news before those announcements are even public on Twitter. Like, they tell the Telegram group, and we have like a half an hour to get into it before Twitter finds out. And then once it starts to spread, everybody buys it and the price pumps up. And we're sitting pretty because we got in all the way at the bottom of that move. So it's really cool to have a community that's that resourceful. So just getting into basic for access to the chats, to that community, and to me, because I'm in the chat a lot myself, it's really inexpensive. So any of you guys want to join, I'd be really happy to have you. If you know anybody who's a member, you can ask them for their affiliate link. Every member gets an affiliate link, and they get $50 cash for every 5 people they refer, or $100 in credit to the group for a free month or 2 for everybody they refer, for every 5 people they refer. So if you can get a link from somebody, you'd be helping out one of my existing members. But yeah, it's a really cool group. If you guys do want to join, I hope you consider it. And we can get into a lot more of this sort of stuff, and I can teach you a hell of a lot more on EMA and support and resistance and Fibonacci. We've done a lot of really good work and taught a lot of people a lot of shit. So if you guys are down for that, hit me up and be happy to have you. I'll do another live stream for you guys, like publicly, in the near future. I'm just pretty busy now doing stuff with the private groups, but make sure you follow me on Twitter, and I will make an announcement if I'm going to do another live stream. So thanks for coming by. I appreciate it. And I will see you next time. If you have any questions about the group or anything else for that matter, feel free to hit me up in the public chat in the Discord group. I'm not there quite as much, but when I do go there, I'm going to try to be there more often moving forward. So, all right. See you guys then. Thanks. Private group members or premium Jedi members, I'll be in the chat in a couple minutes, and I'll post a link for a new live stream so we can dive into some plays on the day.